Imagine waking up tomorrow morning and discovering that your retirement savings have lost 30% of their value. Not because of a war, not because of a financial scam, not because of a natural disaster, but because a handful of artificial intelligence companies failed to live up to expectations. For millions of Americans, that scenario may be more realistic than they realize. Because whether you know it or not, you may already be invested in AI. Not through NVIDIA stock, not through OpenAI, but through your 401k. For decades, Americans have been told to follow a simple formula. Work hard, save consistently, invest for retirement, and let the stock market do the rest. For millions of workers, that means contributing money into retirement accounts every single paycheck. Teachers, nurses, police officers, firefighters, office workers, factory workers. Most never think about where that money actually goes. They simply trust that the market will grow over time. Historically, that's been a good bet. But today's market looks very different from the market your parents invested in. A small group of technology companies now dominates America's stock market. Together, these companies account for a massive share of the S&P 500. That means every month, millions of retirement accounts automatically funnel money into the same handful of AI-driven companies. Most people believe they're investing in the entire American economy. In reality, they're increasingly betting on artificial intelligence, and that's why the AI bubble matters. And at the center of all of it sits one company, NVIDIA. 20 years ago, NVIDIA was known primarily for making graphics cards used in gaming computers. Today, NVIDIA powers the AI revolution. Its advanced chips run the vast majority of the world's most powerful AI systems. Every major AI company depends on NVIDIA. OpenAI, Google, Meta, Microsoft, Anthropic, Oracle. Almost everyone building advanced AI relies on NVIDIA hardware. As demand exploded, NVIDIA's value exploded. But that's where things start becoming uncomfortable. Because eventually, investors began asking a simple question. Where are the profits? And the answer isn't as clear as many people expected. Take OpenAI. The company behind ChatGPT has become one of the most valuable startups in the world. Millions of people use its products. Businesses are integrating AI tools into daily operations. Revenue is growing rapidly. But despite all that growth, OpenAI is still losing billions of dollars. Why? Because artificial intelligence is incredibly expensive. Training advanced AI models requires enormous computing power. Massive server farms, huge electricity bills, specialized hardware, thousands of engineers, billions of dollars in infrastructure. Even after the models are built, the costs continue. Every question users ask costs money. Every image generated costs money. Every response costs money. What happens if companies struggle to monetize AI? What happens if investors lose confidence? And if that happens, the consequences could spread far beyond Silicon Valley. Technology companies now represent a huge portion of stock market wealth. If the bubble bursts, millions of people may discover they were carrying far more risk than they realized. When investors convince themselves that this time was different, because that's the thing about bubbles. Nobody sees them clearly while they're inside them. Everyone sees them clearly after they burst. And by then, it's already too late. May I ask you one question? Would you still invest your 401k in AI stocks if you knew there's a chance we're living through a bigger bubble than the dot-com crash? Commend me on YouTube.